Hello, welcome everyone. Hope you had a wonderful family time with Memorial Day weekend and give thanks and our thoughts and prayers to those who served our country, as always. This is planning and scanning video for the week of May 28th. Let's just get right into it. And before we begin, it's customary to present you with a risk disclosure statement. Make sure that we all understand that trading is risky. With that said, let's go on. All right. Since last week, when we identified when we were in here that the breadth broke out and the volume was strong, that we would see a newer push to a high. And well, we got it. So now what do we see? We're starting to get overstretched as we near this important red line. That is Person's pivot. And that's not just any small time frame. That's based on a quarterly basis. So typically this year's been kind of since the election last year, pivot resistance hasn't really upheld, but pivot point and through time, the quarterly pivot has been very instrumental. And so when a market gets up near a pivot resistance and it's towards the end of the quarter, we're going to have quarterly window dressing going on. It's going to be interesting, as well as the fact that we're almost nearing 20% year-to-date gains in the NASDAQ or the Qs as outlined. So I wanted to bring that to your attention first and foremost. In addition, as we take a look at the NASDAQ composite, the volume did, as my volume indicator shows, did help support that price, but really strange anomaly is that the breadth of the NASDAQ composite is diverging. So while the NASDAQ composite is not a great indicator because you get a lot of stocks that get listed, delisted, listed, and they come and go, it's still something we need to kind of focus on. In addition, we take a look at other considerations like the Dow Jones Industrial Average. Now here's an interesting component. And everyone can clearly see that while we're not exactly at the same high, we're darn close to it in the Dow, and we're not near it in the breadth, and we're certainly not there in volume. So this leaves a speculative question mark as to, are we going to have a new leg to the upside and watch this thing blast off, or are we just kind of stalling, bidding time? And that's the latter is what I'm thinking. And looking at the small cap Russell, which is significantly diverged from performance of NASDAQ, meaning we're on a year-to-date basis barely above 3%, right? So as our weekly thoughts and observations shares with you. So take a look at this. I mean, the volume's off, the breadth is off, then, so is the price is off. And we've just been staying right around this blue area, the pivot, for a little too long. I mean, in the entire quarter, we just went a little bit below it. We went just a little bit above it. And here we find ourselves right at it, which is fair value. We're not overbought. We're not oversold. It's just sideways. Which way is it going to break out as we head into the summer? Well, it's not just the summer, but it's also what's going to happen with any fiscal policy changes, because we know that we've got the Federal Reserve who's going to raise rates again in the next 2 weeks. And we have an unemployment report out this week. The beige book comes out on Wednesday, and the beige book is the beige colored book that the Federal Reserve gets a look at, and it gives an idea of the health and the condition of the banking, GDP, or business commerce in the 12 reporting districts of the Federal Reserve. So we'll find out if people are behind on their loans, looking for loans, if there's an increase in money supply, a decrease, and different business conditions. And that's what that report gives the Federal Reserve to help them make their decision in adjusting interest rates. So I think it's a foregone conclusion that the Fed will raise rates. If they don't, I'm not going to say the word buffoons, but they would certainly come off as they've been telegraphing to the market that they are raising rates. And everyone's been talking about the need for rates to go up based on the current economic environment. Now that leaves us with something to examine. This would be rate hike number 3. Third rate hike. Is 3 times the charm that's going to put a stall in the market or cap a little rally in the market? Or is it just going to maybe, are we just trying to buy time? And if the Fed does raise rates one more time, again, as Janet Yellen says, they're only quarter point Fed rate hikes. But when the rest of the world is at near zero or below zero, and we're going to be positive at 0.75 in the Fed funds rate, that's called an interest rate differential. And that's a huge divergence between what's happening here and abroad. and then you get into corporate debt, the rate of the dollar, and what's happening there with the valuation of the dollar. One thing that I know for sure, as interest rates would go up, the dollar would go up. And what's happened is that the interest rates have gone up, and lately the dollar's gone down. So that's also another perplexing scenario. So when we take a look at some of these markets, and then we look at this, for example, which is the NYSE, the NASDAQ Composite, it did show that we got a breakout in breadth analysis, and we should see corresponding follow-through. Either the price is going to see a follow-through breakout of this sideways consolidation, or the breadth is going to come right back down again as it has done in the past. So we need one of two things. Stocks are going to help carry this up, or the index is going to come down. And that's the quandary, and we don't want to be overexposed in any one sector when this thing comes down. And make no mistakes, I think that at this point, the markets from all types of metrics, and a lot of institutions do look at maybe 200-day moving averages, and they look at the departure from current price to how long they've been departed from the 200-day moving average. And institutions will start saying, I'm managing money. Maybe they've been in Amazon at 600, and they look at Amazon near 1,000, and they go, maybe if we cut back some or reduce our allocation and decline by 20%, so to speak, we're still exposed to Amazon, but we're going to raise some cash, so if it does correct, we can get back in at a cheaper price. And I think that is something that we're coming up to pretty shortly. So part of when we look at the NYSE data, that's the reflection of the Mcclellan Oscillator. So I wanted to bring that into picture. Now, Mcclellan Oscillator is considered a leading indicator because it sometimes take several weeks before we see any type of result. So it's warning that there is a potential price bearish divergence forming. We're making newer highs, and that indicator is slanting to the downside. So this week will kind of be a little important. And with the Federal Open Market Committee meeting in 2 weeks, an unemployment report, a beige book out this week, I didn't want to get, and say that the party could be spoiled for this bull market, but in the essence of, and I wanted to, I thought you would find it interesting, as William McChesney's Martin, who stated, the job of the central bank is to take away the punch bowl just as the party is getting going. Well, that might be what this market will do, is that unless there's any new fiscal policy changes, and if we go through the summer and Congress walks out the door on vacation without any new inaction of fiscal policies to offset maybe tightening and by the Federal Reserve, monetary policies getting a little tighter, this could cause some type of interest rate differential quandary and have a ripple effect. We all need to be aware of that. So, it's kind of like when you're holding the hot potato and the party and the music stops. We haven't seen a disastrous, one-day event. We got one over here, but we haven't seen anything like we got in January of 16 in quite some while. And, a lot of people are getting pretty complacent here in the market. Now, the breadth, I got to tell you, is strong. There's no doubt about it. We broke out. This has just perked its little head right up, but so did price. The only thing that did not perk its head up was huge volume. We are at a massive void of volume fulfilling or sustaining this market. There's a lot of sectors that are not performing with this move. Transportation got into the action a little bit last week with some of the rails and, of course, Alaskan Airlines and Jetblue. And let's look at those two right now. All right, so Jetblue got a little bit of a move with some volume here. We got a little bit of upside from 21 to 29, or 22.95, excuse me. So, a 10% move in a stock that came down and right back up. So, the relative strength just started to improve, and the volume, even though price had a nice move, it's higher than it was at peak number 1. This is point number 2. Volume is well off, so I don't think I'm chasing that right now, but we'll see how it responds this week. ALK is Alaskan Air, had a nice little move to the upside. Relative strength just started to improve. Volume wasn't terrific. Looking at the rails, CNI KSU, all had specific moves, 2-day wonder thrust to the upside. Where is the volume? I would say that volume was pretty much negligible in this whole move. So that leaves me, I mean, thin market conditions can be perhaps a short squeeze and get a market to break out. I'm not looking at chasing this. In fact, I'll be watching to see how prices hold up here at these levels. Next, Apple, APPL, and I've got the APL. Let's get it together there, person. There we go. Apple. Interesting thing is everyone likes Apple, and the only problem is that we had a trading system that actually targeted a max profit up here. And I sent that in an algorithmic writing in a series that I'm doing for everyone, and I think you'll find benefit in it because there is no doubt that this market is being helped, and I'm not saying controlled or manipulated, but more and more algorithms are being used to trade this market. And whether it's intermediate or short-term basis, we need to pay attention to those. And the fact that Apple generated a liquidation, not a sell, but a liquidation of a long position from last January on my work. The fact that it's made a newer high, the relative strength did not, and the volume is diverging, leads me to wonder, is this a wedge pattern for a breakout, or is this a pattern that's going to result into failure? So the fact that we definitely got a relative strength divergence, in other words, the stock market went up, and Apple went flat to down a little bit. So that divergence between the Qs, the NASDAQ 100, and Apple is something to also pay attention to. So what I'm doing is I'm avoiding stocks, and I think we have a position right now that, to be truthful, is a little bit more defensive, if anything. AES, utility stock, had a nice little pop. When we've been in this, it's been sideways, but looking at the XLU, the XLU has just exploded off the chart recently, so that's defensive in nature. So is when we take a look at the utility sector, and you go, wow, that's reminiscent of what the NASDAQ 100's done, right? Breakout of a sideways range. The XLB, when you take a look at some of these other sectors, XLB, let me get that in there for you, and you go, wow, it didn't do anything. So is materials getting ready to pop? And then when you look at the IYT, transportation, between the rails and the airlines last week, you say, wow, it must be doing great. And then you realize that, wait a minute, it's still off its yearly high. So that, in essence, is not showing huge participation in this market. Lastly, IBB, Biotech. If we look at the Biotech, we actually settled off on Friday. And this is not a very positive chart, but in the essence that some stocks are doing well and some stocks aren't. And that's been the kind of the trick. And how do we know that it's not doing well? Well, first and foremost, the person market catcher indicator, the relative strength, which defines stocks in a leading, weakening, lagging, strengthening phase. You could see that we are lagging and weakening against the overall market. I would gather to say what would happen if we start breaking some of this major support target. And, here's the overall pattern we see. Is that a wedge, or, we can't really get long this market aggressively until we break out above this gray line, this resistance, which is right here. And if it closes and breaks below that support, we stand the chance of seeing some further downside. So we got to kind of be careful with this one. I did like Mcclellan and still do. The relative strength in this stock is relatively good still. I mean, look at it. It's beautiful. We were looking to buy a pullback, but after so many weeks, nothing happens. I think there's a better opportunity, and that's why we chose the two names. The first being, let me get rid of this, Ocular Therapy, OCUL. Now, it's a, let's get in there, OCUL, enter. Come on, baby. There we go. Ocular. Why would we buy a breakout? Well, we want to buy strength, and one of the things that I think is interesting about Ocular Therapy was not just the weekly, but look at this, the daily chart, but the weekly chart looks just absolutely spectacular from the perspective that we have this huge rounding bottom pattern, and the relative strength on a weekly basis has increased, and we closed over that gray line in the sand, so to speak. So we did get a breakout. It's in a weekly buy signal. That's what that arrow's pointing up, and with a breakout and on decent volume. So that's why I like Ocular Therapy. The other one on a weekly basis, a fairly new company, Pure Storage. I mean, it's not been around forever, but and I think in this state we had a breakdown, what I like to call the dump before the pump. And if you notice here, as the market was getting dumped down, the volume was pointing up and the relative strength was pointing up. So that right there was a clue. Now that they kind of, anyone that was long the market that got weak longs got stopped out, they went right up. And that's a shame, but that's sometimes what happens in the market. So what we're looking to do is to buy a little bit of a pullback in the market, not looking for a lot, but a little pullback in here against these strong technicals and this longer term trend breakout. I mean, obviously you could see we broke out of that resistance right there, and so perhaps we could see some more upside. And I mean, this thing's a small cap and definitely has the ability in the space it's in to see some significant upside. Next to that, our position, Lennar. Lennar, it's holding its own. It's in that sideways range. The relative strength improved. The volume would be a little bit better, but we did go down, so that's why we're seeing a little light volume there. But in a trading range, I would expect if we get some follow through here over the next couple days. Lennar has lagged the market to a degree, at least in the NASDAQ, so we should see some upside follow through here. Last week, gold, which is represented by GLD here. Gold is still lagging the market. Volume's looking pretty good. It broke out. If you'll notice, it broke out over that little gray line in the sand. If we can get some follow through, we tightened our stops. We should be able to see some further upside. After all, if you take a look, we have a potential for higher. We already have higher highs and we already have higher lows. Now we just need to see if this thing wants to break out, and if it does, that's kind of the target area around the 125 or 1254 area or 125.42, shall I say, in GLD. Let's look at IAU because that's our actual position, and it looks just like GLD and same kind of concept. So we're holding there with, of course, we've raised our stops. Next, if we look at CXO, Concho, nice, came close to a stop out, and that would have been a shame, but the relative strength on a daily basis still looks impressive. Let's look at the weekly charts real quick. And you'll notice that just like in the charts, we still on both systems using Genesis as well as TradeStation. We're in a PPS buy signal. The moving averages are pointing up, went down, probably hit some weak longs, came back above its higher moving average. The weekly relative strength is still negative against the S&P, but improving. It's that fuchsia pink color. It's improving with the yellow moving average, which is what we want to see when the market's looking to start to outperform. And so out of the whole energy complex, when we take a look at like XOP, well, XOP looks miserable. I mean, it's just red and it's in dive mode. And you take a look at OIH, and it too, as a sector, is miserable and it's diving. It looks like, DEFCON 4 mode. It's just seeing continued weakness. But at this point in time, we're almost at a base of support or coming near some important support, especially if you take a look longer term, right down around that 25 handle, and we're 26.32. So maybe we come close and we'll see what happens there, because the volume, according to my work, is a little bit light. We're starting to see some volume divergence. And that relative strength at negative 31, it's too negative. So therefore, I think we could see a turnaround in some of this energy components. Otherwise, we need to see volume come into CXO. And the next, as I wrote about, I need to see CXO, and we'll get that daily chart right back here. I would like to see some short-term volume come in, because last week, even though the relative strength is good, and yes, we had the equal and opposite kind of pattern, the bottom line is I need to see volume get positive in this market to see an acceleration to the upside. and into testing of that 140, 141 handle, which is what we were looking for. So with that said, hopefully we can get some follow through here Monday, Tuesday. If the overall energy complex is a little too oversold and they start to bid it up, this is the one that's relative to the rest of the stocks in its sector is looking a little bit better. Just case in point, we could take a look at Exxon, XOM. And XOM, I mean, from a relative strength, looks pretty dismal. It's sideways. We could take a look at a Valero, for example, and it made newer lows. We could look at a Hess, HESS, and HES I meant, and Hess is the same thing, and then the list goes on and on. PSX, Phillips 66, nothing is really behaving in this space. So Concho does look good. This is BHI, Baker Hughes, and then SLB, Schlumberger. Ow. I mean, the difference between, if anything, Schlumberger, what catches my eye is the fact that, just case in point, that maybe we are too weak, price has gone down, and yet the volume is showing convergence and the relative strength is starting to show signs of improvement. So actually, this is one of the Schlumberger is one of those stocks that actually is too weak that could get a short covering bounce. So if that's the case, it should help out Concho. With that said, I hope everyone did once again have a relaxing, wonderful 3-day holiday. We needed it after what we've been through in this market. And by the way, I think the fireworks continue as we head into the, no offense, next big holiday, which is the 4th of July. Especially with the unemployment report this week, earnings season coming up, end of the quarter, quarterly window dressing, and the Federal Reserve Open Market Committee. It's going to be an interesting June. With that said, we will have a new updated version of the weekly thoughts and observation, because this is one of those weeks where, guess what? It falls right like in the middle of the week where we start a new month. So if any major changes, we will run our monthly scans, as we have our monthly scans all set to find out anything that's really changed, as well as our monthly low closed and high closed dojis. So until then, have a great trading week, everyone. Thank you.